Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So, on Friday, market has reached the predefined resistance level. We said that's probably should be the sale for previous week. Indeed, as you can see, we have a resistance. We have daily overbought very close to the recent top, and on the intraday chart, that was an XOP. So, still, XOP has been hit on Friday. Well, actually, it's lots of things to discuss concerning the fundamental background currently, because the pullback that we see here, it might be just, on the first glance, we probably should treat it as a retracement before downward continuation. It looks not very representable, so some minor pullback on the background of the dovish Fed statement. We saw it many times before, and on the first glance, it should finish somewhere around, and market should keep dropping to the downside. But current fundamental background is not as simple as it seems on the first glance. If you read our weekly report, you will see that the short-term driving factors that we have keep door open for possible upward continuation. From a technical point of view, I always keep in mind the long-term dollar index targets around 87.40. So I was talking about this a lot previously, and the only thing that stands unclear what driving factors could lead market to reach it. But currently, guys, despite all these talkings about rising inflation, good economy recovery, so you could see that the gross domestic product has increased on Friday for 6.5%. It's a bit lower than market expects, but still it provides really healthy recovery. Consumer spending as well stands on the high levels. Inflation, interest rates are dropping. So you could see that currently the 10-year yield stands at 1.2%. Why? The question is why? Everybody expects the tapering announcement in August and September. But it seems that investors reduce the bets on the reflation scenario. And we currently could find a lot of driving factors that could justify further upward action on the euro currency and the downward action on the dollar. For example, Jerome Powell will not announce the tapering on September. Coming non-farm payrolls release will be worse than expected significantly. The tapering will be postponed on unclear time, for instance. So just few that I could say, and all of them will lead to the weakness in the United States dollar. So based on all this stuff, we could say one thing, that yes, we're standing somewhere near the reversal point, so it should happen, and there's no choice. But the question is when it will happen. And with this subject, we have some room, some timing, and when the market could drive it by its own factors, not by the pure dollar and the Fed expectations. And currently, the technical background and in general fundamental background stands so that it really might be the scenario. So, for example, if we'll take a monthly chart, which we also discussed in today's report, you will see that overall performance is not really very bearish. So, market stands above the yearly pivot point. With the recent 2 months, market stands in the tight range, showing just 30% pullback. The rally before this retracement stands relatively strong, so you could see it even on the daily chart. For example, you could see what the performance was here before the consolidation starts. Actually, we have the pennant on the monthly chart. In all this stuff makes me think that overall situation stands not as simple, so that might be not just the action before the drop. It might be the action before upward continuation. We can't ignore this, and we should be extra careful with taking the position here, especially if you intend to make the position on the long-term dollar strength. So what we could say is that currently it's not the time yet to do this. So all the stuff we're discussing in the weekly report. Currently, speaking on the short-term situation that we have here, guys, on the daily chart, if you trade on the daily, unfortunately you do not have something to do because dollar trend stands trend on daily chart stands bullish, and actually you do not have reasons to go short. Theoretically, you could go short with the weekly chart because weekly trend stands bearish, and this might be the retracement inside of the bearish weekly trend. But to do this, you have to get clear bearish stop on the daily. But we do not have it yet, except maybe this combination of the daily overbought and fib level. That's theoretically might be treated as a stretch, but as you can see, market hasn't quite reached the overbought area. It's mostly reaction on intraday target. From that standpoint, it's not enough context to go short. For taking the long position here, it's also not the time yet because market stands at the resistance, and you have to wait for a pullback to take the long position. So those of you who trade on the daily actually has no choice but just wait a bit and see for retracement, because here, as you can see, market has formed bullish reversal swing. It's not very strong and fast, but you can see that this swing is greater than the previous swing down. This one or that one, anyway, market stands above it. Usually when the market forms reversal swing, it shows moderate pullback. Usually it is 50% or even 618. And that will be the chance to consider taking the long position. At the same time, you will check whether the market will stay above these levels to give you some more confidence that maybe some upward extension will happen. What is really looks thrilling on the daily chart is the divergence with the MACD. So take a look what we have. It's not very visible on this wide chart, but if I will tighten it, you could see here 2 lows and 2 lows on the MACD. This is really thrilling, and if it will work, it usually leads to taking out of this the top between the bottoms of the divergence. That's technical moment that confirms that situation stands not as simple. Maybe this is just some patterns that will be erased. We do not know, but actually it could happen. So that's why on the daily chart we still sit on the hands and wait for a pullback. On the intraday charts, yes, there is some background for trading. For instance, on the 4 time frame chart, you could see market hits the XOP, showing some wash and rinse here of this area, grabbing the stops, forming nicely looking bearish engulfing right in the confidence resistance and agreement. So trend turns bearish, and if you trade on the intraday charts, that's the background that you could consider for taking the short position with the stop somewhere above this area. For daily traders, by the way, you just will need to wait when this retracement will be over. On the hourly chart, for taking the position, we could consider classic situation. So this is very typical type of action when the market is moving out from the achieved target. Here, as you can see, by the way, there's our ABCD XOP also, we could say, has been reached mostly. So this is, again, downside reversal swing, and usually market shows ABCD retracement after that. This is the typical background to get the Carter steeple to sell. At least if you would like to go short on hourly chart, for example, you could keep an eye on this possible pattern. That's around 1885 probably. It could be completed with the stops above the 1910 area, 1912. It's possible to consider possible short entry. There's some downward continuation to one of the targets, so that you could estimate later. And this is short-term stop for scalp traders. If you have the bearish view and you're searching chance to go short, that may be something that you could keep an eye on. So as I said, bulls have to wait and see market response on the support areas and when this retracement will be over. So once it will happen, we could return back to discussion of whether it makes sense to go long or not, at what level we could take the position, what the patterns will be formed at this moment. So bulls currently has no object to consider and need to wait a bit and see what will happen.